All right. Joining me is Andy Baehr, Managing Director of Asset Management at GSR, who is one of the world's largest crypto market making and trading firms. They're actually one of the original crypto market makers, launching back in 2013, but they're involved all across the crypto ecosystem. So they invest in blockchain and crypto startups. They provide strategic advisory services on digital assets. They have an asset management arm. They really do it all. And asset management is actually where we will be focusing our conversation because just a few months ago, they launched the GSR Crypto Core3 ETF, ticker BESO, BESO. This is an actively managed ETF offering exposure to Bitcoin, Ether, and Solana. And so, Andy, it is a pleasure to connect. Welcome to the podcast.
I'm so delighted to be here, Nate. Thanks for having me on.
All right, so I gave that very quick description of GSR. There anything you would add to that for people unfamiliar with the firm?
I think you covered it. GSR was launched by being the initial market maker when Ripple launched XRP and began a long history of very happy clients with very happy launches of well-supported tokens, and became ingrained in that sort of early stage process as the market developed. Um, the market's been through a lot. The industry's been through a lot. So GSR's place here is sustainable because of its relationships with the various communities and its trust with new platforms. So joining here has been a real thrill. I've followed the firm very closely for a long time, and it's great to be looking at the world from inside GSR.
Yeah, and briefly talk about your background. I know you were previously head of product and research at CoinDesk Indices. Maybe tell us a little bit about that experience, and then I'd love to hear about your crypto journey overall. Like, how did you first get involved in this space?
Yeah, I was an equity derivatives guy. In fact, I was just having dinner with an old colleague who we were recalling when Deutsche Bank, where we were on the desk there, got involved in ETFs. Not the biggest participant at that time, but we had a pretty big spider and Q book. And I think the intuition about why people were using ETFs, came to me slowly, right? Because a lot of hedge funds were using ETFs for liquidity management and delta hedging their books, and the options market was forming. And a lot of that was replicating other pieces of market structure. And I kept thinking to myself, why aren't these hedge funds trading futures instead of ETFs? Why aren't they trading index options instead of ETF options? And I guess it just took me a long time to realize that this convenience factor, having everything in securities accounts, having everything work smoothly with the same prime brokerage rails for those institutions who are using them as trading vehicles, maybe less so than allocation vehicles, just exploded onto the scene. Later, when I worked at Morgan Stanley and that ETF desk was massive and very deep, it just dawned on me like this is a really important change over the last 5 years. So that's the history goes way back. I got into crypto actually because a friend of mine went to work at GSR who I had covered. He was a hedge fund manager. He's now my manager here. And it sort of sparked a bit of credibility in the market. When you see smart people that you've known in traditional finance make the jump, it sort of lends veracity to this idea that this is an industry that has smart people, that has developing market structure, that has opportunity. And best of all, it's a place where there's a lot of technology and a lot of great ideas and motion and growth, but folks who have lived on the other side in highly regulated environments have something to offer and can usually, see some of the hazards ahead and help avoid them. So that sounded great to me. I'm 4 years in crypto, actually as of today. So it's fabulous, and I wouldn't trade it for anything.
So 4 years in crypto, that's like 25 years in TradFi time.
It's true, but you always feel like you start a conversation with when you started in crypto, and I still feel like I'm part of the younger set. And as you mentioned CoinDesk, I had a wonderful experience at CoinDesk, helping to build that index product and really getting extremely close to the ETF issuers and watching the travails in the pre-approval era, and then watching the stampede in the post-approval era. That business was excellent, and you would go to parties with your friends and you'd be the crypto guy, but actually in an index company, you're kind of the index guy. You're kind of right in the middle. So actually being at GSR, I feel I'm still edging closer to actually being, touching the actual platforms and being very close. But still, we're building fund and investment products in a regulated way. So it's still kind of in the middle. CoinDesk, indices, it was a great, remains a great business, and is supporting some of the great products out there, including the new Morgan Stanley products. So it's a great team. That was a great experience.
I loved your comment just regarding talent flocking to the crypto space, because I can remember, just from my perspective, if you go back to even 2016, 2017, 2018, that's one of the things that really got my attention. Was I saw people from TradFi, who I highly respected, extremely smart people, flocking to crypto. And I think, to your point, that gave it a lot of credibility. And even now, I'm still blown away just by the sheer level of talent across the crypto space. It's become normal now to see that talent. But I just think that's an excellent point. Okay, so a lot I want to ask you about, including the current crypto market backdrop. But let's start with the ETF. So again, the GSR Crypto Core3 ETF, ticker BESO. I mentioned this offers exposure to Bitcoin, Ether, and Solana. This is actively managed. Take us from there. What's the investment approach if we look under the hood?
Yeah, sure. I mean, the idea of the product, and this was filed for before I arrived at GSR, but thankfully we had a way to make some changes and improvements and sort of contour the idea a little bit to face the market where it is today. Um, the idea is to answer the question, like, what crypto should I own? It's the question we all get all the time. And certainly with my background in CoinDesk indices and thinking about weighting multi-asset portfolios and what is a good long-term holding, sort of core holding, you realize that market cap weighted crypto is one way to do things, but it's not always the way that gives you the representation that you want. You may have too much altcoin exposure. You may have too much Bitcoin and not enough of the other names. You may be going too far down the chain, depending on how broad your universe is. In the end, we kind of looked around at each other and said, you would probably tell someone to buy Bitcoin, Ether, and Solana because that's your core, right? You get these two giant themes. You get this primary macro asset in Bitcoin. You have to have it. And you have the two primary layer one blockchains, which are kind of vying and competing to become the core of what will become integration and will change the world, right? These are the two names that always come up first. So having these three cycle survivors, the power trio, however you want to think of them, seem to be a very good universe to include. So they're hard coded into the prospectus. And then the question is, how do you weight them? Well, you can weight them equally, which gives you, I guess, a pretty good shot at having their success reflective in the performance of the ETF. But we also have a lot of great quant research at GSR, and a lot of our asset management products reflect that quant research. And so we set some of the researchers out to say, like, if you have to remain 100% allocated, but you can tweak the weights, how is that going to impact performance? Do you think you can squeeze a couple of extra percentages of performance out, annually, um, to contour the product to face market conditions? And we were pretty pleased with the results of that. So the product now rebalances once a week, remains fully invested under normal conditions, and it will just allocate between 0 and 60% of any of those three tokens. What does that mean in practice? Uh, the signals are quantitative systematic signals. They will tend to reflect momentum between the pairs of tokens. They'll reflect other behavioral things such as seasonality. In general, I think what investors can expect is that in more risk on melt up conditions, you would kind of hope and think and expect that you would want your product to be more Ether and Solana driven, right? Because these are growthier products. In times of contraction, drawdowns, lower risk times, you'd probably want to be more allocated into Bitcoin, higher than that 1/3 base rate. So right now, actually, the product is somewhere between 55 and 60% Bitcoin in terms of its intended allocation. So that's reflective of this period now of kind of softness in the market. So we think that, look, there are some great multi-asset products out there, and as advisors start to allocate, they're going to want to allocate to index products. We think that there's some great choices out there, and an actively managed core choice might be, a good stablemate in that sort of allocation. So it's unique, it stands out. We had a kind of a first to market, in the sense that we were the first actively managed product with staking. And so we're very proud of it. And we think it tells a story that will last a long time.
You mentioned the core three being hard coded into the prospectus. I just want to be clear. Will this ETF only ever own Bitcoin, Ether, and Solana, or could it ever expand?
We'd have to change the prospectus to do that. And I think part of the idea there is that you're sort of declaring that at this stage, that's what your core is, and that's what we believe your core is likely to remain. As we all know, right? Crypto sometimes requires patience. A lot of asset classes, a lot of growthy asset classes and newer ones require patience. The idea is, what are you going to own? Leave it in your portfolio and kind of not check in on it every 2 hours, and know that years and decades from now, if this growth story materializes, you'll get the results then. So we think that these three, and will represent those cycle survivors that will do that duty. So that was the hard code decision, and I think it's a solid one.
By the way, what does the ticker symbol mean? BSO.
BESO, our
Yeah,
founder is Spanish, and BESO is Spanish for kiss, and it's a little bit of a stretch from Core Three, but it does harken back to our origins in southern Spain, and so we love it.
I think I'm an old ETF guy,
Yep,
and I'm big on tickers. So when I see a ticker that I don't understand at first glance, it piques the interest actually. So I like that
definitely.
backstory.
I am glad yeah, that was another decision that I was delighted to inherit, because I think it's super fun, and it injects a little GSR-ness into the product. So I think it's fantastic. I'd also like to see it used by some people who are really trying to find the way to have active, either outright or hedge positions in those top three names. There's more and more trading vehicles, good futures markets. If people want to have a really, kind of easy way to experience some medium hold period, quant research driven active management of those three names, then BESO is a great place to look. We do publish the core three portfolio weights on our website every week, so people are free to have a look. And we think that it's a good way to really kind of make that allocation, that core allocation.
In terms of the underlying exposure in the ETF, you're actually using other spot crypto ETFs. So I
Yep.
show currently you hold the Grayscale Bitcoin Mini Trust ETF, ticker BTC, the iShares Staked Ethereum ETF, ticker ETHB, and then the Bitwise Solana Staking ETF, ticker BSOL. Two questions here. Why not hold spot crypto directly? I think that's something people might ask.
Yes.
Why are you holding ETFs? And then the second question is, just talk a little bit about why you selected those particular ETFs. Like, what's the basic due diligence process here?
Yeah, that's a completely fair question. And I think that we are confident that we're doing the right thing by shareholders, although anybody is right to look at this thing and say, well, hang on a second, especially a crypto native firm, why are you just doing an ETF of ETFs? As an active 40 Act product that rebalances weekly, we have a lot of considerations. We're also coming in as an ETF that's starting out pretty small, and right now our stable of ETFs is one ETF, right? So we don't have the economies of scale. And when I think about what kind of economies of scale I would need to achieve the same, let's say, staking yields in Ether and Solana as the big guys have, I might have trouble organizing that efficient a process, because I don't have that same industrial process as they do. I might even be able to deliver my shareholders better results by using their negotiated staking yields which might that difference might be more than the fees on their ETFs, right? These ETFs are very, very low cost. The other thing is rebalancing once a week. And if I can actually just rebalance ETFs using a market on close mechanism, then I'm actually reducing my implementation costs. So the prospectus allows us to hold other ETFs or hold crypto and do our staking on Ether and Solana ourselves. I think that there's probably a break-even point at which it's more efficient and better for the end user if we do it by hand. And so all that infrastructure is available to us, obviously. But right now, I think we're making the choice that requires explanation, but that the explanation is actually quite reasonable, that it's just much more efficient for us to do it that way. And I think that's a testament to how fluid and well functioning the crypto ETF market is, right? That it's actually easier for us to do this way for an active product. So, do I, is there a little bit of emotional, sadness for not actually being able to touch things and think about, in kind creations and things like that? Sure. But I think in the end that this is a better product, which will deliver better value to the holders.
In terms of the investment application or portfolio application of this product, you mentioned earlier that there are index-based multi-token ETFs on the market. Obviously, you're actively managed, but regardless, one question that I've heard around these ETFs is regarding whether Bitcoin should be included here. And bear with me, I'll try to explain this. So very crudely, Bitcoin is often described as digital gold, right? Whereas a lot of other crypto assets are viewed as sort of high-tech equity plays. And you can comment on that if you'd like. But the question that I will hear is, would I ever buy an ETF that holds both physical gold and tech stocks? Like, does that make sense from an investment perspective? And if the answer to that is no, then why would I do that in crypto? Why would I hold digital gold and these crypto tech plays in the same ETF? So how would you respond to that?
I think it's a fantastic question. And I couldn't agree more that if you have to slice, crypto into two slices, the first slice you're going to take is, Bitcoin on one side, maybe other very currency oriented, tokens like Litecoin or Zcash or whatever. So you're gonna put those into one category of macro assets and describe that any way that you like. They have this macro category, and then you have these growth assets, whose growth relies on volume and integration and use cases and things like that. Could not agree more. For BESO, for Core3, we like having both in there because we get to allocate one to the other. And not only does Bitcoin have its different use case, its own network, its own return drivers, but it has its own volatility profile, and it has its own, I think, reaction function with respect to crypto adoption. A lot of crypto right now is highly correlated, but there is a difference between the Ethereum story right now, which is a very muddled story, right? The Solana story, which has a lot of strength and support behind it, but obviously that hasn't turned into spectacular returns over the last year. And the Bitcoin story, there's still very high correlation. I like the idea of using Bitcoin as the macro asset that you upweight when things start to look a little bit more defensive, and the Ether and Solana side, you want to upweight that a little bit more when things look growthy. Last summer, Q2 and Q3 actually of 2025, perfect examples. Ether was in a real hole, right? It was actually not too much lower than it is right now, but it was around 1,500. And Bitcoin was hanging in there as a macro asset during the first tariff kind of tantrum. And then Ether took off. And Ether took off because Genius Act, I think there was first a short squeeze on the hedge fund side because a lot of folks were short Ether. But then those shorts came off. People anticipated the passage of the Genius Act, stable coins, more tokenization news came out. Ether just took off, and it brought the rest of that growth crypto with it. So my old flagship CoinDesk 20 index just ramped up and started overtaking everything because it was a growth led rally. that's the kind of environment where we expect Core 3 will be heavier weighted in those. Now, in the environment after October 10th, when things really started to contract quite quickly, you'll note that under most conditions, those layer one blockchains will tend to contract a little faster than Bitcoin. And Bitcoin becomes, in fact, the quality asset of the three. You want to allocate more towards there. Now, over time, we expect everything to go up and to experience growth. But if you can just add a little bit of performance by shifting back and forth between that macro side and that growth side in a disciplined way, we think it can just bump up performance a little bit. For long-term holders, we think that that will provide a benefit.
Yeah. So very simply, you're viewing Bitcoin as sort of a ballast or a counterbalance within the portfolio, depending upon market
Precisely.
conditions.
That's right. That's right.
Let me ask you this. Obviously, a big reason to go index based or actively managed when allocating to cryptos because we don't know for sure how the competitive dynamics will play out. And so you were mentioning Ethereum and Solana, of course, the other two assets in the ETF, along with Bitcoin. Those are competing chains. And maybe both of those will win longer term.
Yep.
Maybe both of those will lose longer term, or maybe one wins and one loses. I'm curious how you think about that if you're holding an ETF with only three crypto assets.
We think that both of them have a fundamental place of having so much track record, so much history, so much network effect that they will both find success in their own domains. There are absolutely some places where they're trying to compete directly. There are other places where they're trying to enjoy integration and adoption in parallel. Uh, there are many great layer one blockchains. There are many great layer two blockchains, but the first ones that always come to mind are Ether and Solana. They also have great proof of stake consensus mechanisms, which provide yield to validators and to those positions that are staked. And we can debate back and forth, meaning we internally or the market can. It always comes back to what would you tell somebody to own, Bitcoin, Ether, Solana, and so we don't think that that should be people's entire allocation to crypto, but it's that core that you're very unlikely to violate when you put your portfolio together. So I imagine an advisor who's saying, well, I want to have a core position. And then, I'm sure glad I bought Hyperliquid, when I listened to Nate's podcast a few weeks ago with Matt Hogan. And I'm, sure glad I threw some Zcash in there, and I'm sure glad, but certainly, I'm not going to touch my Bitcoin, Ether, Solana. And by the way, if those are actively managed, then I know that those are working for me. So that's I guess, the mindset of the portfolio manager or the advisor that we're trying to imagine. And if that advisor says, well, I'm not sure actively managed or passive, then they might do a half and half solution and say, here's a market cap weighted one. So I'm clear on that. But I'm also going to allocate a little bit to this actively managed one and see if it can outperform.
Okay, so I think we've done a nice job of going through the ETF. Let's get to the elephant in the room, which is the current crypto market environment. And you've alluded to this
Yeah.
a little bit, but I pulled some performance data. So if we go back to early October, you mentioned October 10th, Bitcoin is down about 50%,
Mm-hmm.
Ether is down 60%, and Solana is down nearly 70%. And so I'll just very simply ask you, what has been your assessment of everything we've seen over the past, 6 to 12 months?
Yeah, I think there are three different phases. And I think in crypto markets, we're used to drawdowns. Drawdowns they're not fun. A lot of the value of crypto companies is denominated in the asset class. So it does represent a drawdown for aggregate value. But we expect these things. It's a young asset class, and when things trade, these kind of things happen. Um, the first phase, this October 10th liquidity event, which was precipitated by, a big liquidations of perpetual futures, really immediately took the wind out of what was a very strong, crypto bull market that really extended all the way, with some interruptions, all the way from sort of early May up until the first week of October. I was actually in Switzerland that week. marketing. I was still at CoinDesk, and we were marketing a product with Wisdom Tree and going around and seeing advisors. And the mood was fantastic, and they were like, we already have some Bitcoin, what are we going to do next? There was great momentum there. But that giant liquidity event, where about nearly $20 billion of perpetual futures were liquidated, really took the air out of the room and caused a lot of reassessment about whether this perpetual futures global crypto native market was reliable and sustainable. A lot of leverage got sucked out of the system, volume, volatility, things like that, and then prices started to decline. There was another liquidity event, which was really more ETF related in early February of this year, where there was a similar situation of deleveraging. And that really was more US based. But again, it removed liquidity, energy from the system. Since from then until about a week ago, we had a very low energy market. We were describing it as ambivalent, and we came up with a bunch of gauges and metrics to use to describe this ambivalence. Um, I would say that ambivalent markets are the worst in crypto because there's no energy in them. There's no trend. There's no potential energy upon which a rally can happen. So in the last week, we finally broke out of that ambivalent stage to the downside. But at the same time, volatility has come back. I fundamentally believe volatility is an important positive instrument for crypto. Volatility came back, and at least some trends started to come back. So in a way, I think it's a healthy thing for the market to experience its sentiment capitulation. It's bouncing off this heavily ambivalent state of mind and at least moving somewhere. That may set the scene for a price recovery, but certainly any kind of volatility is better than none at all. So it's very frustrating for investors. You'll have better statistics than I will on average purchase prices of U.S. crypto ETF holders, but I hear numbers for Bitcoin anyway, in Bitcoin dollars of in the 80,000s or something like that. So people are either sitting on unrealized or realized losses. They're week after week of outflows. There are very few signs of green shoots, hyperliquid maybe being one of them. But this is the life we chose. And we never lose faith for a second that over time, all of the slow money news about integration, tokenizations, blockchain use, and things like that are eventually going to create more momentum on the upside. So to summarize, we've had these two deleveraging events, which were very difficult. We've had almost a quarter of just really ambivalent markets, which to me are the most frustrating. Now, at least we have some volatility returning, and we'll have to see where we go from here.
Do you think the bull run in US stocks that we're seeing right now is sort of sucking some of the oxygen out of the room for crypto? Because for better or worse, I'm out on X, and the sentiment seems to be there's been this rotation from crypto into, say, AI related stocks. Do you think there's anything to that, or is that just a narrative that's out there?
It is undoubtedly the most dominant narrative that maybe, and I would break it down into two phases, right? If you think about crypto as a trading asset class where people really want to get an experience of trading very quickly, making a quick buck using the perpetuals markets, it's kind of similar how US investors will use very, very short dated index options, right, to make a quick play on something. So that very short sort of serotonin oriented trading, which all of the infrastructure in the markets, all the exchanges are trying to attract, right? Because it's great business. Some part of the narrative is a lot of that has been replaced by prediction markets, which in a sense, because they're so specific, they have a binary outcome, can provide that same type of satisfaction of a defined time kind of position. On the AI side, yeah, the AI narrative is competing with the crypto adoption narrative, even though they aren't in conflict with each other. They could actually be kind of synergistic, but that the AI energy level has been a little bit higher, and it's drawn It's drawn money across, as has commodities, right? As has oil, and in the fourth quarter of last year, as did silver and gold. So um, for sure, markets are going to chase where the action is, and crypto just hasn't offered the right action. It's another reason why I think volatility, whether up or down in crypto, will re-invite people back to the table. And I think that that can only be a good thing.
Yeah, I think that's well said. I do wonder if this will continue to be a headwind, at least in the short term, because we have some high profile IPOs coming to market, as you know, with SpaceX and OpenAI and Anthropic. So you're going to have somewhat of a frenzy there. But, longer term, obviously, I think we're both very optimistic on the prospects for crypto, but it's certainly a difficult time now. A few minutes left. Let's come back to the ETF. And I should have asked this earlier, Andy, but what was the decision making behind getting involved in the ETF space to begin with? Like, why did GSR want to play in this space?
Yeah, um, count me among the surprised when I saw that GSR had filed for 5 ETFs back last summer. I was delighted. We hadn't really started our conversations yet about me joining, but I was like, okay. And that was a time when there were a lot of great things happening. That was a time when the digital asset treasury kind of idea was really kind of at its peak. And this idea, people were noticing that, gosh, we have to not let this idea of people trading on US stock markets and getting access to our space that way get away from us. And whether people are really going to lean towards high quality digital asset treasuries or they're going to, lean towards ETFs, um, we don't want to forego that. We at least want to participate. We know that we're small. We know that we're not like as I guess single purpose or as high scale as many of the other guests you have on this show or your other shows, but we have a product that we think is differentiated. So we definitely narrowed scope down a little bit from the 5 that we filed. Some of them, I think, are ideas that are slightly less relevant than they were when they were originally filed. But having a core product that's actively managed that answers that question, what crypto should I own, is an evergreen product that we love. So we support it. We're looking for great ways to find distribution. We think that performance, if our models do a good job, should help sell the product. So I guess the answer is, we just want to participate in this space of people enjoying and participating in the crypto market, even if they're doing it on US stock exchanges.
Well, and now that you are involved in the space, how are you thinking about product development moving forward? You mentioned there were some other filings out there. Maybe a few don't make quite as much sense as they did when you first filed, but just high level, how are you thinking about product moving forward?
I think product market fit right now for all of our segments, whether they're listed products or ETFs, whether they are alternatives returns, whether they're things like DeFi vaults. We're interested in all of them, and we have capabilities across a lot of those different verticals. What kind of segments do we want to attract? Sure, U.S. institutions, U.S. retail, ETFs is going to be a great way for us to reach those. We're also talking to crypto foundations. We're also talking to, other pools of money in the crypto native space. This is GSR's kind of home territory. So what I think we're trying to do is find the right themes where we can be extraordinary, where we can be excellent, where we can put our expertise to best use. Core3 uses our quant research capability to, we think, give us a little bit of an edge over passive products. So that is satisfactory to us. We'll do the same thing with some of our absolute return products, some of those things with our yield products. I think that the US crypto ETF space and the tokenized equity space and parts of the DeFi space have enjoyed a lot of product launches. Let's put it that way, over the last year, and same with prediction markets. And I'm watching very closely to see where the demand starts to fill in. I think there's been a lot of pent up energy to get fantastic products out in front of people. And it's going to be very interesting to see what the uptake is like. I'll give you another example. It feels like the US is getting closer and closer to enabling perpetual futures. In fact, the CFTC has kind of allowed them, and you have a couple of products that were primed for this and have launched. You know better than anyone, right? U.S. retail is not a giant user of futures contracts. This is part of the reason ETFs have been as successful as they are. So is the idea of perpetual futures going to draw in a whole new universe of people who never had a futures account before? Are perpetual futures in the US going to offer the same experience as they do on Binance? If you get liquidated on Binance and you come back the next day, they say, sure, you go, let's play again. If you miss a margin call with your FCM in the United States, you may not be as welcome the next day, right? So it's never going to be quite the same. I would really like to see where the demand fills in. I'd love to see more inflows into all of the multi-asset crypto ETFs. We think that they're underutilized right now. So it's a great time, especially when the market is a little soft right now, to see where demand fills in, both individual and advised money and institutional.
Yeah, I completely agree. I mean, I think I'm very bullish on the multi-token crypto ETF category overall longer term. I think it's just going to take a little bit of time. But like you, I'm watching all the same things. I'm very interested to see where demand goes in the marketplace. And I'll tell you, I love seeing a new entrant like GSR get involved, and certainly one who's crypto native, because it's easy to launch crypto ETFs, but you actually have the expertise behind that to bring to bear. And so I think you have a good combination there. But Andy, really enjoyed the conversation. Again, congratulations on the launch of the Crypto Core3 ETF. Certainly wish you the best of luck moving forward. Thank you very much for joining me.
Thank you so much, Nate.
That was Andy Baehr, Managing Director of Asset Management at GSR. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. Thank you for joining me.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.